Tuesday morning to you all. Alicia, I'm going to start with you. We're in the final weeks of 2019. What are you keeping your eye on here this week?
Look, we think the next 2 weeks are going to be a melt up into the end of the year. You're not going to see a reversal here at all. You've got less risk in the international system, in the international economy, so you're getting this melt up. The other really interesting thing is that earnings for next year, for 2020, are still hanging out there in the 9 to 10% range, very similar to where they were in early October, suggesting that companies are actually not guiding down for next year. So you could see something of an earnings surprise next year. We're pretty positive going into 2020.
Paul, where do you stand right now on Boeing? Obviously, a lot of negative news on Boeing right now, but it's still Boeing. College kids in their dorms are unlikely to create the next Boeing. So what are you inclined to do?
So let's say this. If you haven't sold it already, if you didn't sell it into the rallies off of the bad news, I'd have a hard time pulling the ripcord when what seems like the worst news is already out there. I mean, if you think about it, how much worse can it get? What's left for the MAX to be? Just could they cancel it? Sure. But if you haven't sold it already, I have a very tough time advising someone to sell it down here. I think you're going to close your eyes, swallow for a little while. If you want to sell it, you'll get a rally in the first quarter at some point. Be my guest, sell it. But I don't like selling from weakness. I like selling into strength.
You're nodding your head, Alicia. What are you in agreement here with Paul?
So I would agree with Paul here. I mean, the only thing I'd say is that you're going to have some tax loss selling probably to the end of the year on Boeing. But look, this is about the worst news you're going to get. And so therefore, the stock will probably overreact a little bit, but you're probably close to a bottom here in the stock.
Maybe the worst news you get is that they cut their dividend, which they didn't do.
Right, right.
Do you think this impacts U.S. growth in the first half of next year?
Look, the way we model U.S. growth, for sure it affects U.S. growth. And I've seen estimates from 0.4% to 0.6% in the first quarter alone, annualized. It's a big hit, but it's a little bit like what happened during the shutdown, which it looked like a big hit, but you eventually make it back when you bring production back online. So whatever the top line number is, it's not a permanent cut to GDP. It's a noisy little trough.
I want to jump off what you said, Alicia, about earnings, and Paul, ask you. It doesn't seem like companies are guiding down for at least Q1. What's your outlook for earnings next year?
I wish they were guiding down later in the fourth quarter. It would have made it easier for an upside surprise in Q1. I don't think Q1 is going to be as bad as what people have talked about, but I also don't think it's going to be a rip-roaring, rip-your-face-off earnings season. I think it'll be somewhat of a quiet earnings season. I do have some concerns on the shorter term that maybe we build some kind of January peak and it wouldn't be a shock, but I don't think it's going to be an earnings problem that befalls the market in Q1.
Jared, over to you at the Wi-Fi Interactive Board.
Well, we got some green in Asia. We have the Hang Seng, the Shanghai Composite, and the Kospi in Korea, each up 1.25%. And some red in Europe. We have the DAX down about 0.5%, the CAC 40 down 21 or 0.21%. And in London, the FTSE's just down 13 basis points. Here in the U.S., pretty quiet. Dow is just barely up 1 basis point. S&P 500 is up about 8 basis points here. Here's the overnight price action. We can see we're bumping up against 3,200, and this is kind of the time of year when it's like watching paint dry some of these days. But seasonality definitely favors the bulls through the end of the year and also into January as well, where we have about 1/3 of the annual repositioning due. Interesting, Paul, you mentioned the January peak. That's a potential here, but not expecting anything big until then.
All right, here we have a new trading day getting underway at the New York Stock Exchange and the NASDAQ. Caterpillar doing the honors over at the NYSE, and NASDAQ has Procure ETFs. All right, the Dow Jones Industrial Average starting the day down about 6 points. And your notes, Alicia, you noted that Europe and EM is going to outperform the U.S. over the next few months.
Yes.
Why is that? Why
yes, this feels like a shocking thing to say.
A little bit. When I read it, I went, really?
Yes, because look, the thing is, if you look at the forward PE from the last 10 years, where EM is compared to the U.S. and where Europe is compared to the U.S. They're trading at the lowest end of the range in the last 10 years. And it's in part because EM and Europe have been victims of the trade war and of the global growth slowdown. So what do we see for next year? We see a stabilization of growth. China's printing some interesting numbers, bringing estimates of GDP a couple of points higher for next year. And also, if there's any improvement in the trade situation with China, Europe is going to directly benefit. So you have underpriced markets, you have deeply valued markets that investors have been fleeing from. And when the second derivative goes positive, that's when you go into those markets. And that's why we think Europe's interesting and emerging markets as well.
Paul, do you agree with that?
Interesting point on EM. I believe that the VIX on the EM hit an all-time low yesterday. You've had the least amount of volatility in the emerging market space of all time. So even if I said I don't agree with Alicia, I think she's wrong, which I do somewhat agree with her, but you wouldn't just go from all-time low volatility to EM going down 20%. It's going to take some time. I think EM, especially the EEM ETF, I think it's going to break out. You could get easily a 10 or 15% run early in the new year. And look, Europe has underperformed our markets year after year after year. And even though I don't think the long-term trend has changed, I do agree with Alicia that at least there's a short-term, whatever you want to assign it, you want to call it a tactical trade, be my guest, but certainly on a risk-reward basis, something like VGK or EFA, those two ETFs versus the S&P have nice risk-reward ratios. Add on a little bit of EEM, and I think you could have a good pop in the new year.
But what about, neither one of you mentioned Brexit. What are the effects of Brexit on the UK market? Do you touch that? What's your outlook in 2020?
We've been very positive on the UK market. Our chief economist, Shamik Dar, spent years modeling Brexit in the Foreign Office. So we have a very good sense of what we think a hard Brexit looks like for the UK economy and a negotiated Brexit. Both situations are pretty good for the UK economy, in part because of the getting rid of the uncertainty, which will then encourage more investment. What really has killed the UK economy in the last year is the market decline in investment as Brexit was pushed out. So the deadline kept on moving, and you couldn't bring this thing to a close. Even a harder Brexit, which we have in the headlines today, would not be such a disaster for the UK economy. And flows have been only outward for the last 3 years.
Yeah. Paul, over to you. FedEx out with earnings later on today. It's been a dog of a year for FedEx. They're still having problems with Amazon. What's the trade there?
I don't think it's just FedEx. I think it's the whole transport complex. The transports have been on my list all quarter as at some point they're going to play catch up. They have not broken out yet. They're still in that trading range with which everything else was in for months and months and months. I do think before this market puts in a peak, a tradable peak, you're going to get an upside move in the transport complex. So if that's the case, you would think that FedEx doesn't have to have super stellar, terrific earnings. But if my thesis plays out, it would really prevent FedEx from falling flat on its face yet again. But I do think there is an opportunity for the laggard transports to kick it into high gear. And whether FedEx and UPS can contribute, we'll see shortly. But I don't think they're going to fall flat on their face if I'm going to be right.
And Jared, you have a closer look at the Dow transports, and I see a lot of green.
Yeah, this is quarter to date, just fitting in with the conversation. So we can see the railroad stock, KSU, is up about 19%. If we're looking at FedEx, it's up 15% here, followed by some of the airlines. JetBlue up 14%. And while the Dow transports, they haven't been able to break through that ceiling yet, a lot of these stocks have been able to take advantage of the sector and factor rotation as the 10-year T-note yield rises. Now, today it's off about a couple basis points, so we're not necessarily seeing that. We do see a lot of green here for today. FedEx has got something to prove after the bell, of course.
Alicia, big run in the markets this year, obviously. Do you think we see a pretty sizable consumer spending boom later next year?
We should. And we should because U.S. households are more exposed to equities than they have been since the late 90s and the late 60s. There is a direct wealth effect in U.S. households and consumption. We saw it in the fourth quarter of last year where consumption just dove with the S&P. So there should be some direct correlation to consumer spending. The consumer in the end is still holding up the U.S. economy and in some ways the global economy. So that should be good going forward. And I'll just say to the point earlier, transports are definitely the cyclicals that you're looking at to come back. Also energy, the most hated sector of the S&P went from being 8% of the S&P to 4% of the S&P because of underperformance. If you're looking to get some kind of exposure to cyclicals, energy is the place to go.
Yep. Is 2020 going to be the year energy shines, Paul Schatz?
Well, let me say this. I do think this late in the cycle, we are all, well, many of us are waiting for energy to have that final day in the sun. It certainly has that feel. I'm hoping that when everyone's picks come out for 2020, it's not littered with energy, as has been the case over the last couple of years. But certainly at this point, they're beaten down. You've got, look at ExxonMobil, you've got a 5% dividend yield. So it's pretty hard not to at least take a somewhat positive view of stocks like that. And getting back to a point we just mentioned around this on cyclicals and the consumer discretionary looks absolutely beautiful here. So a lot of those companies, you got to take a look at those coming into the new year. The XLY looks all what you would say coiled up and like a spring that should pop into the new year. So you've got a lot of opportunities here as we come in. Very different than 12 months ago, I'll tell you that.
Jared, over to you.
Yeah, well, we're just talking about the consumer discretionary sector here. Here's the XLY ETF, and we can see it's just bumping up against 2019 highs, and it has definitely been consolidating here and coiled for a move. Looking at some of the sectors that are leading today, we have energy, consumer discretionary, financials, all outperforming along with materials. Let's do quarter to date and see what's been really working this quarter. Healthcare might be a surprise here that it's number one, up 14%, followed by tech, 13%, in financials, 13%. Financials just reached a record high yesterday, or maybe the day before, but they've been kind of one of those stealth factors that has really participated over the last few months.
You know, we had a guest on earlier, Alicia, talking about IPOs. You think 2020 is going to be a good year for new listings coming to market?
I think so, because I think the risk of what's going on in the Democratic Party and some of the economic plans hangs out there over markets. And I think with M&A and IPOs also, there'll be some rush on the calendar to raise some capital here before the election.
Early in the year.
Yeah, look, there's definitely a volatility trade in here somewhere. My guess is between, somewhere between February and April, there's a volatility trade, depending on what happens to the primaries. I mean, different candidates have different levels of friendliness to capital and investing. We'll just leave it at that.
Yeah, you can say that.
Okay, so there's going to be a volatility trade in here somewhere. And if I were considering M&A or an IPO, this would be the year to do it, because you just don't know what the calendar brings going forward in November. Mm-hmm.
Paul, final word to you. What's your top trade for 2020? Wow.
The year hasn't even ended yet. So
it's already over. It's been over for 6 months, Paul.
I haven't given it enough thought, but I do know that what we're loaded up with now, we've got semis and financials and obviously a lot of other sectors. Those are our two top ones. I will not feel the same way about the winners come in 2020. And key point here, to what Alicia said, I think companies will be rushing to have M&A and have IPOs. I hope she's wrong, not because I want her to be wrong, but because that will not be good for the bull market. That will worry me even more. 2019 is going to go down as the most IPOs on a dollar basis with companies that were losing money. That's not exactly the warm and fuzzy. It's not the dot-com bubble, but it certainly doesn't engender good feelings going forward when all these companies losing money are coming public and the public's buying them up. So I would say M&A probably increases, more IPOs. I am praying that they actually make some money instead of throwing dogs to the public.
All right, well, in the meantime, enjoy the market melt-up, folks. Alicia Levine, Paul Schatz, Jared Blickery, thank you.
Thanks, guys. Happy holidays.
Coming up.
Hey, investors. Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.